Thank you so much, Dan. I really, really, really appreciate you joining us today, Dwelling. I know it's been a while we're trying to set up this meeting, so thank you so much.
Yes, Ola, thank you so much for having me on the show. I'm excited to be here and add some value to the audience.
Awesome. So I'm just going to quickly read, Danny's profile. So Danny got started in real estate, through the good old fashioned hard work. He had a mindset to accomplish any goal that he commits to. He did some house hacking in San Francisco, so much, a topic we'll talk about later. But now he's based out of Charleston, South Carolina, where he's kind of building up his real estate portfolio. So Danny, I think you do better justice than I could ever. Could you just tell the audience, our Dwell listeners about you, what you do and how that's going?
Yeah, absolutely. So I am currently focused on commercial and multifamily real estate to add to my portfolio. And the goal of that portfolio is to generate monthly cash flow to continue to build income coming in and really support a lifestyle that my fiance and I are trying to build for ourselves, where we have some more control over our time and control over other income sources outside of a corporate job that could potentially go away at any time.
Okay. That's a good introduction. So you kind of started, I'm kind of reading your profile here. So you said you house hacked in San Francisco. That's pretty interesting. Could you tell us a little bit more about that?
Yeah, so I bought my first property in 2013 in the East Bay, just outside of San Francisco, in a city called Livermore. So when I bought in 2013, the market out there was just recovering a little bit still from the downturn in the economy. So when I bought my property, I bought it for $475,000, and I think in 2006 at the peak, it was trading around $800,000. So I felt that I was getting a good deal on it. And in addition, I was able to have 2 roommates move in and basically cover my entire cost of living, with the exception of about $450 a month that I had to pay out of pocket. So that was for everything. That was for the mortgage payment. That was for taxes. That was for insurance. It was a condo, so that was also for the condo association fee.
Okay.
And cable, internet, electric, so everything. I was coming out of pocket $450 to cover that. So it was a phenomenal deal and a great way for me to get started. And I held the property for a minimum of 2 years to avoid the capital gains tax. I sold the property for $585,000 about 2.5 years later, maybe just under 2.5 years. And during that time when I was preparing to sell, my girlfriend at the time, fiance now, we were having serious discussions about what do we want to get out of life and how can we have, income coming in that isn't trading your time for a paycheck. And I remember back to high school, I always had a passion for real estate. I read books like Rich Dad, Poor Dad. I read some other general investing books, some Donald Trump books, just to get a wide variety of information and learn how the real estate market works. So I knew that was a possibility. So during that time when we were preparing to sell that initial condo, we were having conversations about how do we create this income stream and monthly cash flow to have income coming in on a repeat basis. And the way I knew how to do it was through real estate. And so we sold that property, relocated to Charleston, South Carolina, where we started buying commercial properties and some multifamily properties to build cash flow.
Awesome. So let's kind of go a little bit deeper into the numbers of the house hacking. So how much did you guys buy for? You said you sold it for $585.
Purchased for $475, sold it for $585.
And you mentioned, for some of our Dwell listeners that might not typically know about the capital gains tax, can you just explain that a little bit more for them and what that means?
In the tax code, there is a capital gains avoidance if you own your primary residence and you live in the primary residence for 2 out of the previous 5 years. So you can purchase it on day one and sell it 2 years later, or 2 years and 1 day, and avoid capital gains tax up to $250,000 as an individual. And if you and your spouse own the property together, I believe it's $500,000. But
that's right. It is 500.
Okay, good.
Right. Okay.
I'm not an attorney. I'm not a tax expert. So get your trusted advisor on your team, please.
That's a good disclaimer. So, so this was like right in the beginning. And, I'm just kind of curious to, kind of dig a little bit deeper into, in those very early on stages, what were you reading? What were the resources you were tapping into to actually help you to learn about this, I guess, somewhat new topic called real estate? So can you just kind of help us kind of, list out some of those resources that helped you in the beginning?
Yeah, like I said, Rich Dad, Poor Dad, Cash Flow Quadrant, The Real Estate Millionaire Investor by Gary Keller. Any book that I could get my hands on. Some of the Tony Robbins books, his book about money. He also has Awaken the Giant Within, which is just a book to get your mindset and focus right mentally to really achieve your goal. And that book is very powerful in terms of getting your mindset right. And really, it's critically important to believe in your core that you can accomplish it and you can be an investor, and no property value should really deter you or be a limiting belief in your mindset, because if you limit your belief at all, you will not be able to succeed. So when I had to overcome that to really focus on buying my first investment property, which ended up being $1 million commercial building, having that mindset, I wasn't limited to just say, the only way to do it is to buy single family rental properties that are, under 100,000, and I just buy them one at a time. And every 2 years I buy one more property. So don't limit your belief, really trust in yourself and establish a goal, and you can achieve that goal and have that, power of positive thinking going your way. The other books that were helpful for me in the commercial space, books written by Dolph DeRoss. He is an advisor to Donald Trump and has done a lot of deals with Donald Trump in the commercial space. So his book was very important for me to understand the value of triple net leases and why I love triple net commercial leases, because that basically instills that the tenant is responsible for all of the maintenance inside of the building. The owner is responsible for the outside. Some triple net leases varies where the tenant is responsible for everything and the owner just collects a paycheck. So that book was very inspiring for my mindset of how do I think about residential? How do I think about commercial? And I chose that commercial path right out of the gate, which has been extremely helpful for getting a good cash flow basis.
Okay, so listeners might not be so sure what that is. Could you tell us a little bit more about that, please?
Yeah, a triple net lease in the commercial space is an agreement between landlord and tenant where the tenant takes on the responsibility to not only pay your base rental for the month, but they also pay for real estate taxes, they pay for insurance, and they pay for any common maintenance or landscaping in and around the property. In addition, they will pay for their own electric, cable, and internet and phone service and gas if they have that. Wow. So they basically pay for real estate, taxes, utilities, and insurance. So the owner basically collects a paycheck and manages and owns the property.
Oh, wow. That's interesting. So if I'm, listening to this podcast, I'm, driving or, I'm just thinking, I want to do something similar to Danny, how do I go about and, look for this triple net lease deals? I mean, what's kind of like the timeline, or should I say the process that you take to not only find these deals, but also close on these deals?
The process is really the same as looking for residential properties. You need to shift your mindset to allow yourself to believe that you can be successful in the commercial space. what I would recommend is having a good team of people around you to help find those properties. So, commercial isn't as easy to find or track down as an off-market residential deal where you could go door knocking in the neighborhood or driving for dollars. So in the commercial space, it's all about relationships. It's a smaller community. There's less investors, there's less brokers, there's less agents in that commercial space because the residential is so much larger. So having good relationships with brokers and agents in your area, get your name out there that you're looking for commercial properties. And what I would do is have a single page PDF document that lists the criteria that you're looking for. So price range of what you are looking for. Are you looking for a building that is built in the last 10 years? Are you comfortable with a building that's 30 years old that may require more maintenance or additional capital expenditure to improve that property before you get your tenants in there? So I would have a one-page PDF that you can send out to brokers and agents, have some initial conversations, say, here's what I'm looking for, sign me up on your, auto distribution of whenever a commercial property comes on the market, send it my way if it meets my criteria of price, of age, of property type. So commercial can vary from light industrial, office professional, which I primarily invest in. And then you can also have retail. So get your criteria right, get your focus on your goal of what you want to purchase, and then start networking, have those conversations, look for deals on the MLS in your local area through your broker and agent contacts. Alternatively, you can use LoopNet. And the one trick that I learned about LoopNet is that you need to have, if you're taking this seriously, you need to sign up for the premium membership on LoopNet. If you're only looking for the properties that are listed to the free users, they only post 1% of properties for free users to use. So 99% of the properties are reserved for premium users. So if you're taking this business seriously, sign up, pay the couple $100 a month, and get access to 100% of the properties, not just 1% as a free user.
Oh, wow. Okay. That's, those are really, really good nuggets there for our dual listeners. So I think it's probably a good time for us to maybe go into one of the deals that you've closed on. Just kind of walk us through the process, definitely the numbers, just to kind of get an idea of how that deal went for you. Or Triple Net Lease deal.
Sure. So why don't I run through the first property that I purchased? It was 2 commercial buildings with 3 units each. At the time of purchase, 5 out of the 6 units were occupied. And during my negotiations with the seller of the property, I had negotiated to get a seller leaseback. And what that means is the seller will rent the property back at fair market rent, in addition to covering real estate taxes, insurance, and utilities for that space. So when I bought it, I had it 100% occupied. 5 out of 6 were from regular paying tenants with long-term triple net leases in place. The seller rented one of the units back for 3 months, which then covered my basis for income, and then I was able to manage my expenses. So I bought the properties, the 2 buildings together, for $1 million. And I structured it using a traditional financing 80-20 loan. So putting down $200,000. I felt that it was a really great deal. The cash on cash return in year 1 is greater than 30%. It was a phenomenal deal. I was very surprised to get it off of the MLS. It was an on-market deal. I think the seller had it overpriced, and a lot of investors just didn't even approach it. So I came in $400,000 below the ask price. I think they had it listed for around 1.3 million or 1.25, and my initial offer was 900,000. We ended up settling on $1 million with a 3-month rent back for that space. So all in all, it was a great deal, and the cash on cash return was phenomenal for my first commercial property. It's now been about 6 months of owning that property, and we are 100% occupied. I was able to fill the seller leaseback space last month. And so I had 2 months of vacancy in that space, but the property it's a cash cow, and it was able to cover that vacancy. So it's been a really good deal, and be happy to answer any questions that you think would help the listeners.
That's pretty awesome. Congratulations on that deal. That's awesome. So with the rent back, so can you just tell us a little bit more about that? So the seller, are you saying the seller would basically give you credit back for that space just to give you like some wiggle room in the first 3 months of assuming that property?
Yeah, so the idea in the commercial space, sellers and buyers both know the difficulty to fill a space. It's not quite the same as filling a residential house where you have a ton of individuals looking to move in. You need to have a business or somebody that is going to fit that type of space. So we negotiated 3 months. The seller was willing to rent it back. So on the first of each month, following the close of the property, I received a check for the rent and additional triple net lease rent additions from the seller. And then when that 3 months was over, it was vacant for 2 months, and then I got the space filled and rented out. So one tip, if you're ever negotiating on a commercial deal and you're negotiating to have the seller lease back the space, I would say get at least 5 months. That seems to be, in my experience, doing other commercial deals, about 5 months is the time it takes to find yourself a good tenant and just to be comfortable with that cost coming in.
Awesome. So that's a really good one. I mean, I'm just kind of also thinking, so is there like a particular strategy in how you place commercial tenants as opposed to the residential tenants? Just kind of curious.
What I tend to do is just drive around the area. First, you need to understand what type of building you have. So in my situation, it was an office professional type space. My existing tenants were small business operators, and something that would go well in that space would be like an insurance broker, a real estate company that has maybe like 3 or 4 agents and maybe 1 or 2 brokers, because the space was 1,250 square feet. So it was not going to be a large company that has 10 plus people, but what small businesses use office professional space? And even just driving around the area, you would see like, auto insurance companies, real estate firms, architects, construction engineering firms, all different types of small businesses. So that's really who I was targeting in that situation.
Okay, that's awesome. I think that the one deal is pretty awesome, but I think the next one would be pretty good because I know you've got about $4 million in assets right now. So do you kind of want to walk us through the next deal as well? I'm just kind of curious to see if we have any parallels from the first and second.
Yeah, so from the first deal, it was a commercial office professional purchase. The second deal, again, was a commercial office professional purchase. And then the third property was a residential short sale that's going to be a renovation project. And then my most recent deal was a 4-unit multifamily property. So I've kind of gone all over the place.
Different asset classes. Right.
Exactly. Commercial, residential, and then multifamily. But there's specific criteria that we look for in doing our due diligence and what our buying criteria is for the property. So these have fit into that portfolio goal. So going from commercial to a short sale renovation project and then picking up the multifamily property, the commercial deals and the multifamily are long-term holds, and the short sale renovation is a short-term project.
So how do you kind of, you've got a lot going on here. So how do you kind of balance, I know with the Triple Net list, that's more, it's not so hands-on as a typical, short sale renovation. So how do you kind of balance these different asset classes, and how do you manage to keep all the balls in the air, shall I say?
Yeah, I think another good point is having good relationships with property managers. So I do self-manage the first purchase that I have, which is a total of 6 units, all triple net leases, fairly low maintenance. I might get a call or an email every other month just about a question, and it's not very labor intensive. It just takes some of my time. The second commercial building, we have a professional property manager that manages that for us and oversees the day-to-day operations, any tenant requests, just because we have single-use office rentals in that space. So we have some higher turnover potential and higher tenant requests that may come in. So having a property manager in place allows me to focus on building the portfolio and looking at more deals to acquire. So I have less time to oversee it. I still look at the financials on a weekly and monthly basis to make sure that it's being operated correctly. And then with the residential properties, having a good property manager in place to manage those tenants. I never went in and started my portfolio with the intention to be in the property management business. It's extremely important to have focused and dedicated property managers. So that's what I allow professionals to do. They have the tools to be extremely successful and really allow the residents to have a great and enjoyable experience. And I'm really there just to support the property manager and ultimately make sure that those residents love living in that property. And that's what we do.
Awesome. Okay. So it looks like you've got a lot going on. I'm just kind of curious. What would you say, who are the people that you typically surround yourselves with? And if you do that, I mean, how do you kind of do that?
Oh, that's an interesting question. My fiance and I always work on, who are we working with? Who do we spend our time with? I believe it's absolutely critical to your success to be around like-minded individuals. So if I'm spending my time with friends and family, I'm typically talking real estate. I'm usually talking about how, important decisions can impact the rest of your life. And one small shift in buying some property that generates cash flow can help you out in extremely positive ways. So I tend to surround myself with like-minded individuals, and we talk business, we talk, real life situations. We talk about money. We talk about income. We talk about what are you working on? We talk about what are your goals in life? Do you want to have control of your time, or do you want to, trade your time for a paycheck? How do you have multiple income streams to stay balanced? Learning from what happened in the 2006, 7, 8 crash. How do you prepare and stay agile and stay focused on having multiple income streams that can support you through tough times?
Wow, that's awesome. So, and you say you still kind of, you work. And so how do you kind of have that balance with your work and your real estate investment? Some people typically would say, well, I have a job, I can't really invest. What do you say to that?
I say, change your mindset, get very serious and focused on what your goal is and what do you want to achieve in your life. You can definitely prioritize and optimize your daily schedule to have time be available to you to do the things that you need to get done and want to get done. So waking up early, I go to the gym every morning. I'm usually up by 6 o'clock, or on the weekends, I will wake up around 7:30, get a little bit more rest on the weekends. But you make your schedule and you get things done and you prioritize what's really important to you. So, on the weekends, it's spending time with my fiance, and part of us spending time together, we'll go and look at properties. So we enjoy doing those things. So it's just get your mindset right, focus on what you want to achieve. And working a corporate job, I just do morning work before I go into the office. Like I said, I'm up early to get to the gym, and then I'll spend an hour working on real estate before I have to be to the office at 8 a.m. And then in the evenings, I'm focused on real estate and making sure that I spend the time to look for new deals, work with my team, respond to any emails or inquiries, make some phone calls, do some networking, do blogging. I have a YouTube channel that I post frequent videos on, post on Bigger Pockets. So you make the time.
Okay, so we're kind of coming towards the conclusion of our time here. So I'm just thinking we have a section, you know, in our show that basically says, you know, getting to know our guests. So you want to tell us a little bit more about, you know, your hobbies, you know, what you like to do. I know you mentioned some of them. So just tell us a little bit more about Danny.
More about me. I really enjoy playing golf. The game of golf has taught me a lot of just how to be a good person, have integrity, and it's an individual sport where you focus your time and energy practicing and you can really hone your skills. So I take golf and that mindset of how can I hone my skills through practice and repetition into my business. So that's one of my hobbies, playing golf. Another hobby, real estate, man. I love it. I'm all about it. I'm looking for properties. If I'm driving in any city, anywhere, you'll probably catch me glancing out of the window, just looking around at what's going on. What are they building? What kind of businesses are here? What commercial properties do they have in this city that might be appropriate for me to bring to Charleston? Or maybe I'm going to invest in the city that I'm looking at. So real estate, golf. I love to travel. My fiance and I get around to quite a few countries each year and really see the world. We also enjoy trying new food, making food. Food is very important, and I love trying new things.
Nice. You're a foodie. Nice. Okay. Awesome. Well, so if I want to go, you know, look for you and find you, I mean, how can I get more about you? How can I connect with you?
The best place to find me is on my website, randazzocapital.com. We have a lot of information about what we're working on, deals that we've done, and then always check out the blog page on there.
Awesome. Awesome. And you also mentioned your YouTube channel.
Yeah, you can get to my YouTube channel as well. Just through my website, I have links out to my YouTube videos as well.
Awesome. Well, it's been an awesome time with you, Danny. Getting to learn so much about Triple Net Leases. It's been an amazing conversation with you. Thank you so much, Danny.
Ola, thank you so much for having me on the show.
Thank you.